Good morning and welcome, ladies and gentlemen, traders around the globe. We from Admiral Markets say hello to our real-time daily trading idea webinars. In this webinar, we have 5 days with 5 different traders, so on 5 different trading styles. And we would like to screen the markets today, show you some interesting trading setups, and for sure answering here your questions. But first of all, please be aware of the risk. Here's our risk disclaimer. Forex and CFDs are leveraged products that can result in losses that exceed your deposit. So they maybe not be subtitled for everyone. And please be aware that all we are showing and presenting here today is just a personal opinion of our traders and not an advice for investing. So maybe you already heard about this. The ESMA regulations has already started since the 1st of August this year. So you have a reduction in your leverage effect here. For example, on the right side, you see it on the DAX. How does the impact is working on your margin in euro? You have different options. If you would like to trade with higher leverage, you can see, for example, the option to enter the professional client status. For more information about this, please check out our website or contact our customer service. Here's a picture for me. My name is Tim Temp. I'm an account manager from Germany, and we do this webinar today in co-moderation. Here you can see our traders. Today we have the pleasure here with Paul. He connected to us in a couple of moments here and show us his trading ideas for today. Here we have a quick overview. Why Admiral Markets? For example, here our bestseller, the DAX 30. We offer it with a typical fixed spread of only 0.8 points during the main trading hours. These and other products you can also trade in mini contracts. Here on the right side, you can see some of our customer service and product awards. So you can contact us if you have additional questions or problems or anything else. Feel free to contact us. So here we have a quick overview. One World Global Office. We have a lot of offices around the globe with different regulations. So for more information about this, you can also check out our website. So that's it for the moment for me. And so I say good morning to you, Paul. Hope you're doing well and you can start.
Good morning, Tim. Good morning, everybody. Thanks for the introduction. Hopefully, I hope that you can all hear my voice. I hope you can all see my screens, ladies and gentlemen. Here we are, Tuesday, 13th of November already, and we had a bit of an interesting week last week. This week, in terms of big news, is there's not as much, but there's a couple of interesting elements that are going to come out, probably going to give us some sort of moves and a little bit of interesting talking points. So I think tonight we've got GDP from Japan. That's going to be pretty interesting based upon the sort of where giving us an indication that the kind of world is slowing down and we're actually having a little bit of a heading towards a kind of a bit of a breakdown in most of the kind of global economies. Tomorrow it's the same with I think we have both the German GDP and the Eurozone GDP. Okay, everyone's going to be keeping an eye on that to give us an indication, and we can see that in the DAX and the Euro charts that we'll look at in a couple of moments. We've also got UK and US CPIs tomorrow. Okay, that will be of interest to people with regards to sort of a future trajectory of interest rate hikes. And then we have Mr. Powell speaking, and of course, when the main central bankers speak, all of the traders in the world start to listen. And then on Friday, we have another central banker, and Mr. Draghi. He'll be speaking as well, and with let's say the rather disappointing performance of both Euro and DAX, etc., and with some of the other let's say structural problems in the Eurozone, everyone will be, of course, keen to see what he has to say for himself. So there's going to be a few bits of interesting data, a few bits of commentary from central bankers, which will give markets either a lift or a bit of a punishing, depending upon your particular view and your side of the market. But as always, there's plenty for us to look at here in our session today. Here we've got a chart of gold. Okay, so those of you who joined me last Tuesday, we talked about a a little trade on gold last week. We were just a little bit frustratingly unfortunate, but you know, that's trading. Let's just take a quick look and see, as always, what could we have learned. Our trade last week was effectively, you know, you've heard me talking about it for, you know, for weeks, maybe even months now, this kind of 1230 to 1235 zone. And last week we saw price pushing up here, okay, and looking to turn away and fall away. And we, you know, if I go down to the 1 hour chart there, you know, we had sort of a trade entry there of around about 1234 with a stop of around about 1236 and our target down to towards the 1229 level. And what actually happened was, you know, the price pushed up a little bit, okay. We were probably, you might have been taken out just on the spread, even though it didn't trade up to 1236. You might have just been snipped out on the spread before it actually, of course, reversed and rolled over and went down to the target quite nicely. So if you were just a little bit nipped on that, well, you know, that's it's a bit frustrating, but there were more opportunities to sort of rejoin that trade on the lower time frames. And the thing that's of interest to us is that we can see is that once again, price, you know, almost pretty much the next day kind of rallied back up into that area, okay, that 1234 sort of level, rallied up there, put in a nice key reversal candle there, candle we've been talking about on the Mastering the 4Ms of Trading webinar before price once again return to that sort of 12 down towards the kind of the sort of 1229 and beyond, and we can see that actually, you know, sort of this week we're getting beneath that 1200 level, okay, the big psychological number. If I look at that on the weekly chart, well, you know, we are back down into that block, okay, we're back down into that block. I'm a little bit surprised. I thought we might actually sort of hold up a little bit, but you know, if you remember, I've been saying that this weekly 200 period moving average had acted as pretty strong resistance, and we can see that it just didn't have what it takes to break. So if it can't break it, well, then it's going to go back and retest these kind of lows. So now I'd be expecting us to sort of drift down towards at least that kind of 1190 level, okay, then maybe even lower down towards, or you know, kind of 1180, 1170. So you know, I'm bearish on gold, and the as I said, the 4 hour chart, you know, you can see that's accelerating a little bit, and actually I'll be looking to see if I can sort of short that on a good pullback, preferably up to around about the 1203 area. That's what I'd like to see. So you know, add that to your watch list to take a look at. So you know, we can see that, you know, gold has been falling away. Well, you know, what does that actually mean for the currencies? Okay, what does that actually mean that's going on, or we can be interested in? Well, you know, as always, if gold is rolling down, well, you know, let's have a quick look and see what you know, the dollar's doing. And you know, you can see there yourself, this is the weekly chart, okay? For those of you who are joining us for the first time, I know that we have a broad range of experience in the room. Let's just zoom in here. You'll see my charts, you know, just green and red, bullish and bearish candles, a 20 period moving average, a 50 period moving average, and a 200 period moving average, some fractals, and then just drawing on significant levels or trend lines or patterns. And what we can see here in the dollar, you know, we thought maybe last week maybe there was a double top, but we can see actually this week, okay, dollars pressed to new highs. That's new highs for 2018, okay, ladies and gentlemen, that's what we can see. That's just giving us a sign of, you know, dollar strength, okay? So, you know, there's an indication of, again, a bit of gold weakness and dollar strength, and, you know, we can see that pretty clearly there, okay? So, you know, as always, if we're getting dollar strength, well, then, you know, what impact will that have on the other currencies? And we can see that pretty clearly. So, if you're a new trader, FX trader, okay, you need to keep an eye on what this the dollar index is doing, because, you know, the dollar's the big daddy. All right, okay, you don't want to be fighting that. Okay, you want to be just working out where it's going. And if the dollar's hitting new highs, well, then that's going to have an impact on the other majors. So let's have a quick look at that. That kind of, you know, what we have is, you know, we'll have a look at the euro, okay? Of course, you know, lots of, you know, very sort of interesting trading euro dollar. If I just bring up a chart that I use myself, okay, you know, I talk about in my own trading in FX pairs about how I like to effectively look to sort of buy strength and sell weakness, and every week I do my own little diagram and work to work out where's the strength and where's the weakness in the trading. And what I can see here, okay, is that euro, having been pretty strong, it is now the bottom of the pile, okay? Euro is the bottom of the pile. It's 8 out of 8, okay? So, you know, I want to be buying strength, selling weakness. That's what I want to be doing. Okay, the euro is getting hammered at the moment. So, you know, I take that into looking at, you know, the major euro pairs. And, you know, of course, euro dollar's the biggest one. It's the major sort of trading FX pair. And we can see here, okay, this is the daily chart. You know, we've broken, okay. You know, we talked up here, okay, that we might get back down to this level about 113, but we can see there, okay, the end of last week, start of this week, we've just dropped even further. We've broken that 113 level, okay, back down. You know, back down here, these levels at 12.15. If I go down the chart a little bit further, okay, to the 4 hour, last week I talked about, could we have a bit of an inverse head and shoulders? We had a trade here, okay, just using the power of 20, and we had a nice little jump up. But we can see that you know, inverse head and shoulders, yes, it did move up, but invariably, you know, the sort of the news out of Europe was poor, and we've had a reverse then. And literally, if you look at that over the last sort of the last sort of 4 to 5 trading days, okay, you know, we've dropped from you know, 115 down towards getting towards sort of 112 level, okay. You know, we've had a sort of a 300 pip drop there, okay. So you've seen that we've had that dollar strength on one side, euro weakness on the other, okay. Euro is the bottom of the pile. So, you know, what we want to be doing is waiting to see, is there an opportunity for us to continue to short the euro against the dollar here, okay. Right this moment, you know, to this moment here, okay, you know, there was a little bit of we had a little bit of a, you know, a key reversal here, price pushed up, okay, actually with more momentum reversal and closed down. But when I go down to the sort of the shorter time frames here, the 15-minute chart, this looks very scrappy to me at the moment, okay, very, very scrappy. And what I've learned over years of trading is, you know, when the price action is very, very scrappy, okay, you know, I'm actually better to just sit on my hands, okay, and that takes a little bit of practice. There comes a little bit of experience, okay. You know, it's very easy to say be patient, but you know, it becomes easier to be patient when you actually have a very clear idea of what you're looking for, and this is not what I'm looking for at the moment. So the euro dollar, okay, you know, I'd actually like to see it sort of you know, bang up towards around about that sort of 1270, 1280 area. And then on a longer term, on a swing basis, I'd be looking to sort of for bearish reversal patterns there to be able to sort of take a short down. Okay, I'm not going to fight the pattern of dollar strength and euro weakness. Okay, I'm just going to wait for it to get a proper little pullback to give me an opportunity to sort of to get on board that. And so yeah, so you know, as I said, it's you know, it's a case of, you know, selling euro across the board is the sort of the sort of the name of the game at the moment. And invariably, you know, that's what we'll be, you know, sort of just keeping an eye on that. So the euro has been very, very poor, okay, but then, you know, so has pound sterling, okay. And if we take a little bit of a quick look at a profile for the British pound, okay, we'll just jump to a profile. I have profiles set up for all of the major currency pairs. This is my profile for you know, pound sterling. Just going to adjust my chart a little bit, and what hopefully you can see is here I've got, you know, pound against dollar, euro against sterling, pound against CAD, pound against Aussie, pound against Kiwi, pound against Swiss franc, pound against yen, and then FTSE over here at the bottom right. You know, I like to look at weekly charts. Okay, it's the weekends. It's the sort of the big picture that I like to work with. And what, you know, we've just noticed here at this weekend is that, you know, on the pound against the dollar, the pound against the yen, the pound against the Swiss franc, and to a lesser extent the sort of the pound against the Canadian dollar. And what we had was, you know, big weekly rejection candles. All right, and you know, this is an indication of the kind of sort of swings that we're getting in both euro and sterling as we get closer to this supposed deal. All right, and so, you know, trading euro and GBP is a little bit tense at the moment, because regardless of the sort of the great chart setups you may get, some little bit of you know, news might come out on Sky News about, you know, some element of it that, you know, some Theresa May says something or Barney, and that can actually swing both euro and sterling very, very rapidly. So, you know, I'm curious to see that, you know, we've had these big rejection candles on the weekly charts, okay, for sterling, and with this week we've just continued down with that sort of selling sterling. So I would just be keeping an eye on that. I'm just effectively, I'm going to be, looking to be short sterling. That's my aim at the moment. But I'm basically what I'll be saying is just keep your powder dry at the moment. Okay, just wait to see for a good possible opportunity, and to be able to sort of to trade with that. What we've seen here on the, I'm keeping an eye on the pound against the dollar on the weekly chart. What was sorry, this is on the hourly chart. We've had a lovely downtrend there. We've had a little bit of a double bottom, and what we're actually doing is we're getting a bit of a, and hopefully you can see we're getting a bit of a squeeze there between the 50 period moving average and the 20 period moving average. Okay, both of them are acting as dynamic resistance and support, and it's just a case of we're getting just a little bit of a squeeze. We talked about this in the mastering the 4Ms charts, that if we get a little bit of a bit of support from the 20 and then a push above 50, well then there might be an intraday long, okay, to get up to sort of fill this gap from earlier at the start of this week. And so I'd be looking to sort of see if we get a break above that high there. If we can break that 50 on an intraday basis, well then I'd be looking to see could we get long to fill that gap up towards around about the 129.65. Okay, so gaps are like, think of gaps like a vacuum. Okay, nature abhors a vacuum. We will always look to fill it. So just keep an eye on that and just wait to see if it pops north. As I said, I'll be looking to sort of get up there, trade it up there, sort of on an intraday basis to fill the gap. But actually, longer term, I'd actually probably be looking to sort of taking swing shorts once it's filled that gap. Now, in the same way that both the euro and the sterling have kind of fallen down the boards, okay, in terms of the strength to weakness matrix, we've had the opposite with the sort of the Aussie dollar and the Kiwi dollar, which has been, is kind of curious to me, because what a lot of that has been, especially with the Aussie dollar, is what we've seen a lot of that with is a case of the underlying negotiations between United States and China. It seems to swing quite rapidly. One day everybody's happy, the next day everybody's upset, and of course that has an impact, especially on Aussie dollar, because of course it's so linked to what goes on within the Chinese economy. But if we look at the Kiwi dollar, a couple of months ago during summer, Kiwi dollar and Aussie dollar, they were where the euro is now. They were the bottom of the pile. Okay, they were the weakest kid in the playground. Okay, and everybody was picking on them. But in a short space of time, the Kiwi dollar in particular has become enormously strong. All right, and this is a Kiwi dollar profile, and hopefully you can see there. I've got it set up with daily charts. You can see that we've had for about the last month, we've had some just great trends there, okay, on Kiwi dollar. Okay, some just really long strong trends as the Kiwi dollar has strengthened, and other currencies like Swiss franc, like euro, like sterling, okay, have actually sort of fallen away. And what I've been looking at today is a little bit of a trade. This is a little bit of a setup. The traders were already triggered earlier this morning, but this is the Kiwi dollar against the Canadian dollar, and what's actually happened is, as I said, we've had a lovely uptrend, okay, since sort of September. We've had a little bit of congestion, but actually what we've now is we've run into the daily 200 period moving average, and we're having a little bit of a reaction off it, okay. As you can see, price on the 4-hour chart is going a little bit consolidated underneath it. On the 1-hour chart, okay, we've had tried to push up, but if I'm going to go down to the sort of shorter time frames, in particular, the sort of the 5-minute chart, okay, this is a bit of a setup, a little bit of a sort of smaller trade earlier this morning. And, what we had was, as I said, on the daily charts run into the 200 period moving average, but actually what we were looking at, this is what we covered yesterday in the last couple of weeks on the sort of mastering the 4Ms trading, is that price pushed up here and we had a 1, 2, 3 formation, okay. The third point of the point 1, 2, 3 is also a rejection candle, and also the power of the 20 period moving average was giving us the 20 period moving average had moved from being dynamic resistance, dynamic support to now dynamic resistance, and this was our opportunity for a very short trade, okay, a quick short trade this morning to actually effectively sort of trade that break, okay, as it fell down back towards the sort of the decision points back into the block. So that's a short trade, but as I said, that's what we've been covering there on the mastering the 4Ms trading webinars. Just being able to have a confluence of events, a confluence of trades there. Okay, we could see that price was going to bounce off that daily 200. gave us a little bit of a rejection. It then gave us that 1, 2, 3 formation with a power of 20 and a rejection candle to give us a very quick little trade there for a very quick sort of 10 pips there this morning on the Kiwi dollar against the Canadian dollar. So there you go. We've covered quite a bit there on the FX markets there, Tim. If we've got a moment or two left, I'll happily answer any question if we have any. Otherwise, I wish you all the best of success in your own trading, ladies and gentlemen.
Yes, Paul. One market we have, for example, here, New Zealand dollar to Canadian dollar. If we have a quicker look here, so you already have this chart. Sorry, the screen is not that fast here. Yeah, we have some other question, but unfortunately, I don't understand the language. It's like
It looks like somebody wants me to have a little quick look at the DAX 30.
Yeah,
so I'll just do it.
this question I understand as well. Okay, yeah, let's have a quick look on the DAX and yeah.
We'll do that. What I can read, it looks like Modris had exactly the same setup on the New Zealand dollar against Canadian dollar. Well done, Modris. That's a great trade. Thanks for that's a super trade there. So let's have a quick look at DAX just to finish off. Of course, DAX is an enormously popular trading instrument for Admiral Markets customers. Okay, so here we go. DAX 30 weekly chart. All right. When I've talked about it, we've talked about how, having had that head and shoulders pattern, we fell down here around about that 11,430 area. Okay, we're around about the weekly 200. It's been a little bit, a little bit scrappy there. Okay, in the weekly chart. And personally, I think that if we continue down on a downtrend, I'd be looking at around about 10,800 as my next level. We can see that was that kind of area of that block there. I'd be keeping an eye on that. Daily chart, I looked there. Okay, we looked at it, and I was thinking about, well, could there have been a sort of an inverse head and shoulders starting to build, but I don't really see it. And actually, the price action has kind of dispelled that there. You can see that yourself this week. If we go down to the 4-hourly chart, we had a couple of nice trades here running up a couple of weeks back, but this week has been all about selling the DAX. And interestingly, what we're looking at is that that 11,430, okay, 11,435 zone, okay, you can see it there, right? This is why it's important to draw on and update these levels of support and resistance. Okay, resistance becomes support. There's been a pretty significant level there. We can see actually, this morning it popped up to it, and if I go down to the hourly chart, popped up to it there. Okay, and if I go down to the 15-minute chart, that might give us a little bit of an idea. What I was trying to sort of talk about is, here we have the 15-minute chart. Okay, and what I've been interested in is I've drawn in these little blue boxes here. Okay, so what we had was prices in an uptrend. It started to roll over. It then actually, we had the 20-period moving average. It went once again from being support to resistance. When I see that, okay, I start to get excited to see that, okay, maybe that uptrend is now over and I should be getting ready to short. And then when I have a big key reversal bar like that, pushes to new highs but closes beneath the lows, okay, of the previous candles, that's a short. Okay, that's a short, and you can see that dropped down nicely, and that was a lovely move there. Okay, yesterday, as we came overnight, okay, we had a little bit of a false breakout here. Okay, and prices swung up above. Price got up above the 220, up above the 50, a little bit of congestion, and then it came back down into this area. And what's happened again is, I'm not big on moving average crossovers, but what I am intrigued is when, when that's the 20 and the 50, they have now become dynamic support. And that's what happened is we saw a Bosch, a move up there, okay, this morning, up back to that 11,436, 11,435 zone, okay, which was around about where the 50-minute 200 was. We pulled up to that and we've fallen away to it. And now we have that 20-period moving average acting as support. My view here at the moment is, for what I'll be saying for the intraday traders on the DAX, is that I'd be looking at this as as a little bit of a squeeze going on, ladies and gentlemen, a little bit of a squeeze building here. Okay, I would just be keeping an eye on that. If I see a breakdown beneath the sort of 11,360 level, then I'd be looking maybe as to retest 11,280. If we get a pop above that 11,436 and above that 200 and above there and hold, well, then actually I'll be looking to I'll be biased to the long side, and I'll be looking to trade back up to around about these areas of around about 11,530. So there you go, Tim. That was a quick bit of a look going through all of the quick look at all the time frames on the DAX. I hope that helps people.
Yes, Paul, I think you so too. So yeah, thanks here for you showing us your trading setups and your view on the markets for today. Thanks for all our listeners here today and your questions. It was a pleasure. So we are back tomorrow at the same time. Feel free to join us there for all our German guys here in this webinar in the afternoon. We have at 3 p.m. The second or the last webinar for today. Here, you are also invited for this ones. All are totally free. So yeah, feel free to join us there. Thanks again, everybody. Have a good day and always good trades. Some last words from you, Paul, if you like. And yeah, we see us next week.
Yeah, all right. Yeah, absolutely. Listen, thanks for joining us. But I would say, London 4 o'clock Mondays, Mastering the 4Ms webinar. As Tim said, it's all free content. Okay, free education. I've talked about a few of the setups there that we've seen today. By all means, come along and join us. You'll find them on the Admiral Markets YouTube channel, on the Facebook page. As always, I wish you the best of success in your own trade, and I look forward to speaking to you next week.